Kia ora, I'm David Chaston with 90 at 9, brought to you by Interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. All eyes are on whether the global economy is heading for a hard or a soft landing. In a closely watched speech yesterday, Fed boss Powell said the US Federal Reserve may scale back the pace of its interest rate hikes in December. Markets are now sure the December 15 rate change will now be 50 basis points rather than the 75 basis points previously assumed. And layoffs in the US tech sector are starting to mount, and this has pushed the layoff data to nearly a 2-year high. Still, in the grand scheme, the numbers at 77,000 are really very low still. US jobless claims came in lower than expected at just under 200,000, taking the total on these benefits to 1.26 million and still 0.9% of their workforce. It was surprising that this labour market data didn't rise given the anecdotal job layoff reporting. And analysts are still expecting payrolls to have grown by just 200,000 in November, which will be the lowest level in nearly 2 years. This data will be released tomorrow morning. And the PCE inflation measure came in at just 6% in October, its lowest of the year, and another indicator price pressures are easing in the US. Meanwhile, personal income rose faster at a rate exceeding 8%, while personal spending rose even faster, an annualized rate exceeding 9%. The core drivers of American consumption are not showing any sign of stress yet. All these labour market signals may be remaining upbeat and point to a soft landing, but things have turned lower on the factory floor. The widely watched ISM PMI contracted in November, its first since May 2020, and the internationally benchmarked market PMI is contracting too. In China, Beijing is set to announce an easing of its pandemic quarantine protocols in coming days, a marked shift in policy after anger over the world's toughest curbs fueled widespread protests there. And trade activity is softening fast now. South Korean exports fell 14% in November from a year ago. That's a big move for a big exporter. And Japan's factory PMI slipped back into contraction in November. And the downturn intensified in the EU. With all this recent retreat in trade, you would expect container shipping rates to be falling fast, and they're down another 5% last week to be 75% lower than year-ago levels and 15% lower than 10-year averages. And international air cargo volumes are sagging again too, down 5.6% globally in October, down 8% in the Asia-Pacific region. The US Treasury 10-year yield starts today at 3.55% and down 22 basis points on the Powell speech. And the price of gold will open today up a US dollar-induced $49 to $1,802 an ounce. And oil prices start today up another $2 from this time yesterday at just over $82 a barrel in use, while the international Brent price is up much less at just on $87 a barrel. These shifts are also induced by a falling US dollar. And the Kiwi dollar will open today at 63.7 US cents and up almost 1.5 cents since this time yesterday. Against the Australian dollar, we're up a 0.75 cent at 93.6 Australian cents, and against the euro, we're also up a 0.25 cent at 60.7 euro cents. That all means our trade weighted index starts today at just on 72 and up 60 basis points from this time yesterday and a 3-month high. Get more news affecting the economy in New Zealand from Interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by Interest.co.nz.